Hello, I'm Ingrid Willinge and welcome to Media Week. Ahead on today's program, Wynn Corporation takes a stand and quits free TV over ongoing feuds on regulations. Plus, former News of the World editor Rebecca Brooks returns as Chief Executive of News UK. That's all ahead with James Manning, our co-host today, of course, as always, editor and publisher of Media Week. But first, the 2015 Astra Conference takes place next week. It's the annual subscription television forum, and this year is focused on thinking outside the box. Various international and local heavyweights will take to the stage to discuss the constantly changing media landscape. And for more on what to expect, we're joined by Chief Executive of Astra, Andrew Maiden, in the studio with us now. Andrew, good afternoon to you. Welcome to the show.
Thanks for having me.
On no doubt a busy week for you ahead of this conference. So tell us a bit on what we can expect, because it's all about the changing landscape at the moment.
Yeah, well, we're talking change, and we're going to hear from 4 international executives who are coming to Australia from BBC, Fox, Viacom and Turner, and they are going to be telling us how in their home markets they're attempting to co-opt the disruption that's happening to television and create new revenue streams.
Tell us, you've also got Richard Freudenstein, the Chief Executive Foxtel, on the bill. I think he's going to be talking about the history of subscription television in Australia. We just celebrated 20 years, is that right?
That's right. 20 years old this year. I think Foxtel has its birthday next month. He'll be talking a bit about the growth of the platform over those 20 years, and I think particularly the results that he announced to the market a few weeks ago, which indicated that there's growth both at the cable and satellite end and also at the SVOD end with Presto, as well as other SVOD providers reporting a lot of growth.
The Australian today, I noticed, reporting Foxtel's biggest, I think it was the biggest August ever, and they nearly broke their record sales figure for a single day as well. So the price cut, the upgraded packages seem to be having an effect, which is good news for Foxtel and all your independent channel providers as well, yes?
That's right, I mean, and as you intimate, the industry is vertically disintegrated, so there are a lot of companies producing content that finds its way onto your screen. And in relation to SVOD, I think it's important to, number one, realise that there's growth not just at the SVOD level, but on the main cable and satellite product. And secondly, although SVOD has got everyone talking, it's still a relatively small market, probably worth only about 150 million at the moment.
And Andrew, there's a lot of talk that the SVOD space will actually drive more people to subscription television like Foxtel because people are more comfortable to pay.
Yeah, I think what's different this year is that you've got millions more Australians who are getting into the habit of paying for their content, and we believe that rising tide is going to lift all boats, and by the way, it'll help combat piracy.
I think we've talked to you before about Netflix and the impact that's had on the market. You said you'd even have them on board if they applied for membership. I'm guessing that hasn't happened yet?
I don't think they're joining many industry associations anywhere in the world. It's a great product. They have some great shows, as do their competitors. And I guess the arrival of these platforms is good for anyone who watches television.
So you see competition as a positive thing then for subscription?
Well, I don't even know that you could call it competition. The evidence around the world, in the US and Western Europe in particular, is that streaming services tend to be additive. They're not taken as substitutes to people's existing cable packages, and so we believe that as a result of their entry, the overall market will be bigger.
Talking production as well, I mean, you've talked a bit about production funding and needing to reform the model here. In what sense are you talking about that? Well,
in many ways, the way funding is put together is based on the assumption that one brand will own one technology platform, and we'd like to see whether it's time to begin changing that. Another thing we would like to advocate is an increase in the tax offset for TV production. The local industry is under a lot of pressure from platforms overseas that are often quite unregulated, and so it's important that we keep the Australian TV production sector healthy. One way of doing that might be to double the tax offset from 20 to 40% so that TV is no longer the poor cousin to film. So we're in Canberra with the Screen Producers Association advocating that change.
Now, we like having you in here because one of your areas of expertise is that sort of lobbying in Canberra. You've been doing that for quite a while. Well, that would seem a bit of a no-brainer, that giving that industry a bit of a tax break. Is it a significant enough revenue that the government would miss out on them that they're not actioning it, or is there any other reason?
It wouldn't cost much. Depending on the model that you chose, it could cost the Commonwealth as little as $10 million to create several hundred jobs. We'll have more to say on that with the screen producers in a few weeks' time, but it's a pretty cheap way to create jobs and assure Australians that the TV production industry will be healthy for years to come.
What else has been occupying you down in Canberra? 'Cause we've seen a lot of lobbying from the free TV people. There's lots of argy-bargy in their camps about the media laws and all that sort of thing.
And you've been obviously vocal as well on anti-siphoning rules.
So where do you stand on some of that stuff?
Well, the PM said that there'll be no change unless there's agreement to a package, unless there's consensus. We're not on the verge of consensus, let's say. further maybe we've ever been from consensus. Well, look, I understand the rationale for reforming Cross and Reach in particular. The intellectual argument is pretty strong, but we believe that if reform is undertaken, it needs to be balanced. It needs to distribute the benefits and the costs fairly across industry. You might say anti-siphoning is no more popular now than it ever was, but the truth is, number one, with the recent AFL sports right deal and maybe an NRL deal coming up, you could easily change the list to reflect what's been negotiated on the market without taking anything away from free audiences. And number two, the recent deal that saw BT buy the rights to Cricket Australia broadcasts in the UK, I think shows how out-of-date anti-siphoning is. In Australia, for instance, there's nothing to stop Netflix, if it chose to, buying up, say, the Melbourne Cup and charging Australians to watch that. There's nothing in the current rules that prevents that from happening. I think that illustrates better than anything why those anti-siphoning rules are out of date. Exactly,
because of technology. So in terms of your lobbying of the government on that, will that continue now, and even though they've said no change for the time being?
Well, we always worry in an election year that governments like to give things away to squeaky wheels. So we'll try and ensure the government maintains its position that there can only be reform if there is a high degree of consensus and if the reforms are done evenly and fairly.
You mentioned those the latest AFL deal, the NRL deal's been big talk about that. At the moment, Foxtel or Fox Sports doesn't have a deal for that. We talk about the significance of the NRL ratings. Does it concern you as a non-looker that Foxtel, do you think there's any chance they'll get cut out of that deal, or do you think they'll come to the table eventually?
Look, I think this is a long process. I think both sides are positioning themselves tactically, and I think that this will be solved by the market in the not-too-distant future.
All right, something else that we watch is piracy, obviously, and it's been a big issue here in Australia. No real hard data, but what are you seeing in terms of maybe a decline in infringements?
Well, it's been a few months now since Parliament passed legislation to make it easier to crack down on pirates. There was a lot of media at the time, and we were hopeful that that would in itself deter people from doing the wrong thing. And you're right, there isn't hard data yet, but the boffins in networks say that there's already evidence that that infringement behaviour, as we call it, is beginning to decline. In the UK, where similar legislation was passed recently, there was a huge double-digit decline in piracy, so we're hopeful the same will be true here.
The TV ratings too, that's another, you've mentioned the TV rights. A lot of that sport will be streamed on mobile devices. From your seat, are we getting any closer to sort of some resolutions there, do you think?
Hopefully we are, because there's too much money at stake for this not to be solved. I mean, if you look around the world in the UK or in the US, there appears to be big declines in television audiences, but we know that the time people spend watching screens isn't changing. All that's happening is that technology is finding it harder to catch up with people as they move screens and as they shift content. And so in the US, the guys who do this for a living believe that they're getting very close to cracking systems that will help networks and content producers measure that audience, and when they can do that, the money should flow.
How much do you think that will change the industry once we do come up with a solution to that?
It'll change it quite dramatically. I mean, the ad market's been sluggish for both pay and free in the last 6 or 12 months, though it's beginning to pick up again. And I think given the amount of money that is on the table, technology has to solve this problem, and hopefully it'll do that in the next few months.
An interesting week too with MCN, which sells all the subscription TV channels, has taken on the representation of 10. I think that started on September 1. Good news, I guess, for your members that rely on some of their income from advertising. They've potentially got a much better offer to advertisers.
Yeah, it'll mean that MCN can tailor packages that suit the needs of any particular advertiser, whether it's free to air or the as they call niche audiences on some pay TV channels.
Andrew, before we let you go, we'll just quickly mention that conference again, because it is next Wednesday, but there's also the Women in Television Breakfast, which is every year as well. Do you want to just tell us who's joining us for that?
Well, every year we get about 600 women along to hear about their advancement in the industry. This year we've got Magda Subansky, Margaret Pomerantz and BBC's Yalda Hakim. So we're hoping for a great morning on Wednesday next week.
Should be a good one. Andrew Maiden, Chief Executive of Astra, thank you so much for joining us on the show.
A pleasure.
Well, moving on now to take a quick check on the media sector's performance on the share market this week. We're joined by Chris Weston from IG. Chris, good afternoon to you. Obviously, a huge amount of volatility on the markets over the past couple of weeks. Just wondering your view on how the domestic media names have fared in this sort of climate.
Yeah, it's not been great, to be honest. I mean, if you look at a name like Seven West Media, you know, it's in a very, very strong downtrend, multi-month lows there. You know, 10 Network, all-time lows, 17 cents. You know, it doesn't really bode well for people who are in the stock at the moment. There's no real stability. Seek as well, you know, that's found some buying around the $12 mark. It's, you know, since that earnings time, it seems to have stabilised and trading a bit of a tight range. Prime as well, you know, that had a really nice rally from around the 55-cent region. And again, it's just range trading. There's a number of these domestic plays like Fairfax as well as Prime who are just really trading in a bit of a tight range, and I think probably for the next month will continue doing so. But it is tough going. I mean, you've got a domestic sector which is sluggish. We saw that in the GDP. Real incomes are falling. You've got global volatility. It's a tough gig at the moment to be in these local domestic cyclical stocks. Yeah,
as you say, obviously generally struggling, but are the outlooks bad as well for guidance?
Well, I mean, it depends on which company. I mean, Fairfax didn't refrain to give any kind of major guidance. Their recent outlook, they did say for the first 5 weeks of this month have been pretty good, and you know, I think we're expecting pretty decent earnings growth from Fairfax for this year. We're looking for about 80% earnings growth, about 1% revenue growth, though. I think probably the one who gave the most definitive guidance for the outlook for advertising was Seven West Media. I mean, their television outlook they said was okay. That's going to be helped obviously by what we're seeing from the Olympics, but you could turn to magazines. That was pretty good, but newspapers was pretty dire. But yeah, ultimately there's a lack of visibility in the advertising space for these guys at the moment, and I think share prices are clearly reflecting that at the moment.
All right, Chris, really appreciate your insights. Thank you very much.
Thanks a lot.
Chris Weston there from IG. We do need to take a quick break on Media Week. Coming up next, we'll check in on the latest ratings, plus the latest on Wynn's decision to quit free TV Australia. That's coming up.